Hi there, you are with the Vesta Hub, Carlsbad Hub of Vesta Divorce. We're all Vesta Hubs, but we are the Carlsbad Hub here in Southern California. And tonight we are talking about how to find hidden assets. Topic near and dear to all of our hearts, and I'm sure yours. And it's going to include deaths as well and unreported income. We're getting a real deep dive. My name is Laurie McGee. I am your host. I am a divorce mediator, I'm a divorce coach, and I am also a co-parenting specialist. And my physical location is here in the village of Carlsbad, but I work with couples and clients all over the state of California. Let me introduce you to the other half of our legal team who's here this evening. And Ken does have to step out early because he's a dad and he has a wonderful family event this evening. We couldn't have the whole team, but we got the most important people when it comes to hidden assets. Ken, you want to introduce yourself?
Thank you, Laura. And as Laura said, I'm the family law attorney at the Hub, and my law practice is entirely dedicated to family law. So I deal with all aspects of a divorce, whether you're starting at the beginning with a petition or a response, and dealing with all the issues that come with a divorce, whether it's child custody, visitation, child support, spousal support, division of assets and debts, something very relevant to this evening. And I also deal with cases that arise after a divorce, because after a divorce judgment, sadly, there can be controversies that arise even then relating to modifying custody and visitation orders or support. So that's what I do. And I'm happy that you're all here this evening and we can share some knowledge with you on this really important topic about trying to track down missing assets and debts. And with that, I'll turn it over to our amazing CDFA, Laurie.
Hi, everyone. Laurie Itkin, certified divorce financial analyst. So in California, community property state, you are dividing community property assets. So you've got to know what are separate, what are community property. I get involved in that. And if there are hidden assets, then we don't really know what the community property net worth is to divide. So we'll be talking tonight about all those things: hidden assets, hidden debts, underreporting of income, crypto, assets held outside the United States, and financial literacy, because a lot of people wondering about hidden assets, it may be that the assets they aren't hidden. They just don't understand how to read the financial information in a divorce. And it's complicated and it's different than anything you've ever done before.
Thanks, Laurie. Yeah, so important. So I want to again thank you for joining us here at the Carlsbad Hub. We do have some other Hub members that weren't able to join us this evening. We also work with a lender. Emily Palmer is amazing. She's been, I think, 25 or 30 years in the industry. She's a broker. And so if you're looking for assistance understanding, for example, can you buy out a property? Can you even qualify? Sometimes people, I've noticed in my mediation practice, start negotiating that they want to buy out a property, but they haven't figured out if they can qualify. So she's a good go-to person for that. And Jennifer Cheney, realtor, she works here in San Diego County. And so if you're not part of San Diego County, she wouldn't really be readily available for you. But she's one of the top realtors in the county, and she's been with our hub for several years and an amazing resource. One of the things I have her often do when I'm working in a mediation is we're trying to understand the value of all the assets, the character, et cetera. And definitely Laurie's going to cover some of the aspects of what if it's the home that you already had when you got married, for example. But one of the things Jennifer does is she does a very detailed complementary comparative market analysis. She's usually willing to go right into the home or even have you walk with a video through the home. So you get way better than a Zillow assessment of what the home's worth. And home's often one of the biggest assets that you're talking about. And people don't necessarily know what kind of financing is attached to that. So just understanding all of that. So she's wonderful at helping us. She's part of our whole support team. I'm sorry they couldn't join you this evening, but come back. We're here every month. And in fact, next month, we are going to be talking, our topic is called Love and, keep saying it wrong, Love and Leashes. We're going to be talking about not only custody and sharing of parenting time with children, but the pets, which I was just saying,
like they're cats on a leash.
Cats on a leash.
It's a harness, right?
A harness, yeah. And in fact, I literally this afternoon just finished drafting a marital settlement agreement with 2 cats and a dog, and they needed an end of life agreement and cost of care. It's complex. Guess what? Children emancipate when they turn 18 or graduate high school, 19 or graduate high school. Pets can live for 20 years. They don't emancipate. They only pass away.
Well,
Exactly. And then you have to make end of life decisions. So join us here if you're looking for some information next month. I want to point out there's also a poll, and that helps us to tailor some of our questions and answers this evening. And also, we are as part of the Vesta team, Vesta has a concierge, and the concierge team reaches out to each and every one of you following each webinar, determine whether you want to connect more closely with any one of us. We all offer complimentary consultations. So they'll take care of connecting you. We're here tonight to inform you, to educate you, and to help you to connect with the resources you need. It truly takes a village to have a regret-free divorce. So that's why we're here. So tonight, Ken has to step out a little bit earlier than usual. I love that it's for a wonderful family time. And so we're going to start with some of the litigation. I want Ken to really speak to the litigation aspects of what happens when you're in that environment. And maybe before we go straight into that, Ken, let's talk a little bit about just the different models. Some people try to self-represent, not usually the best.
yeah.
Mediate, litigate, and a few things in between. Maybe you can give them a couple of examples of what the range of possibilities are, and also how they could use you as an attorney without litigating.
Certainly. So what Laura's talking about is, I think Laura puts it best. She says every divorce has to end the same way, meaning a judge gets a divorce judgment and signs off on it. But it's the pathway of how you get to that point that can really be different and really be painful or not so painful. Okay. What I always recommend to clients, even though I am a litigator, is to try for path A, which is mediation. Okay. And what that is where you have a skilled family law attorney like Laura, who knows the law and her whole life is the area of family law and does nothing but divorce mediations. And as a neutral mediator, she will meet with the parties, guide them through the whole divorce process, and help them understand everything and come to a negotiated settlement. Okay. And in that arena, even though I'm a litigator, I can be of service because I can be what's called a consulting attorney. And both sides can have their own consulting attorney where they can consult with their attorney about the proposals being exchanged or discussed and get unvarnished advice as far as what is in their best interest. Because keep in mind that as a mediator, Laura, again, an expert family law attorney and mediator, but she has to maintain neutrality. So if one of the parties were to ask, hey, Laura, do you think I should maybe make a counter proposal on this? Is this the best deal I can get? She can't go there. You can say, talk to that with your consulting attorney or someone else, but I can't ever deviate from being a fully impartial party here. So that's where a consulting attorney such as myself can be very helpful. On the other extreme is litigation, where you're going to court against the other side and they're represented by an attorney or not. But the point is you're going to court before a judge to resolve every single issue. You can't agree on anything, so everything's a fight. As you can imagine, that it gets extremely expensive very fast. And at some point, some years down the road at this rate, you'll finally have a trial where it adjudicates all of the issues of the divorce, and a judge will finally get that judgment to sign off on. But that's going to be many years later, as opposed to a few months or weeks later, depending on your case, if you do mediation. In the middle ground, I guess I can call it a hybrid kind of model, is where maybe mediation really isn't going to work for the parties, but the parties have enough common sense to know that it's not really in their best interest to spend hundreds of thousands of legal fees to go fight about every single issue in court. And what they'll do is each side will have their attorney, and through their attorneys, they will discuss and negotiate the terms of a settlement, ultimately come to an agreement. And that is not as fast and it's not as economically pleasant as mediation, but it is also far less expensive than a fully litigated divorce. So those are essentially the three pathways you can use to get to the finish line in a divorce and the different roles that I could play. Obviously, in the litigated environment, I'd be going to court all the time for you. So that's really the contrasting models of reaching a conclusion in your divorce.
Excellent. Yeah, and one of the differences in terms of the power of subpoena, if you're working in a mediated environment, most people are self-represented. Attorneys are not on the record because mediation is bound by the evidence code as a confidential procedure. You can't litigate and mediate as a parallel system, which means we don't have the power of subpoena. Like Ken says, he has the power of subpoena. And if you really can't get at documents, there's an unwillingness to present, to provide, shall we say. Sometimes that's where you're forced into the attorney model. But Laurie and I are going to be talking about some of the tools that you can use in mediation. And Laurie mentioned at the outset, sometimes people think they need to hire a shark and go get subpoena everything. And oftentimes, if you know how to read statements, you can basically then be more specific. I just had a case the other day where you're all required, whether you're mediating, litigating, you are required to do financial disclosures. One of the forms you're going to fill out, if you want to go look at online, if you haven't got into this phase yet, FL for family law -142. And that is a table of contents of all of your assets, all your debts. And you're going to have to provide not just a written table of contents, but all the documents that support that. And husband had provided 3 bank statements. And I opened one, and this is where really just the power of simple observation. And I was like, oh, transfer to account 1, 2, 3, 4, transfer to account 5, 6, 7, 8. I like, looks like there's at least 8 or 9 bank accounts, and you only uploaded 3. And his response was, "Oh, like this, I didn't know I had to do them all." And so sometimes it's that simple, because now that he knows, perhaps there was, and perhaps he just literally forgot, overwhelmed. I don't know. But the point is, we didn't need a subpoena. He went and got the rest of the bank statements. They're all on the drive. And now we can have conversations about, why is this money moving in circles all over the place? What's going on here? But
And as a CDFA, I straddle both the litigation world and the mediation world. And it's just amazing in the litigation world with discovery. We are getting so many documents where I am doing the exact same analysis, but had we been able to do it in a mediated session, it would have been faster. I would have spent less hours. We would have gotten the documents we need, the relevant documents, not the irrelevant documents. There is, as Ken talked about, there is a choice you need to make about how you get divorced.
Yeah, Laurie raises a really great point there, because people come into a divorce, and I get a lot of potential clients, and clients say there's a lot of distrust, and we understand. In a divorce, there's going to be a lot of distrust because obviously sadly the relationship has failed. But with that, many times comes this feeling that it's necessary to just put out this massive net and try to grab every bit of information and document out there because they're convinced that some hiding is going on. So what that entails from the litigated contents is what's called discovery. Okay. And discovery has many different tools. And some of them are sending interrogatories, which are the other side has to answer them under oath and submit written responses. You can ask them to list all your accounts from this institution, so on and so forth. There's these things called demands for production of documents, where you'll say all your bank accounts, checking accounts from this time frame, all your brokerage accounts from this time frame, so on and so forth. It can even be things such as compelling them to sit for a deposition, where they will call the party in with their attorney. Your attorney will be there, and a court reporter will be there, and he will sit there for hours going through documents, asking the deponent, the other side, answering the questions about each and every document to gain information about financial issues. And there's also subpoena, where you can submit subpoenas to financial institutions where you believe that there's relevant documents that are helpful to your case in your divorce. Now, that's all well and good, but anytime before going down that path, I always have a very serious conversation with a client, because the rate at which the legal fees can get out of hand in the discovery process is alarming and shocking. I can't put enough adjectives on that. Accelerates quickly. That goofy saying that we like, that escalated quickly, that literally applies to discovery. So you really got to make a very serious assessment as to whether, bottom line is the juice worth the squeeze, because sadly, we've all seen it as litigators. And I know Laura and Laurie have both seen it, where people have spent tens or maybe hundreds of thousands in discovery, and they literally come away with almost nothing that's helpful. It's stuff that literally they already knew. And Laura made the point that you'll get these, when it comes to discovery, you're not going to get a nice indexed volume of, here's where to look and this and that. You're going to get bugs or
Get them done by
Dropbox.
colleagues.
Exactly. Exactly.
Yeah.
Or these massive Dropbox file with gigs and gigs of files that your attorney and the paralegal are going to have to sort through, which translates into massive legal bills. Being smart about what you're looking for and having a plan to find what you're looking for is enormously helpful. And that's where someone with the financial acumen and the smarts like Laurie can be tremendously valuable in helping you put that game plan together and helping you get to the right decision on how to go about it.
And let me give you an example. I've just finished a case where there's been a lot of post-separation activity, right? So if you have community property accounts that had balances on the date of separation, if you have the statements from the date of separation, and I'll just give you an example. Let's say there's an account, a bank account that had $40,000 in it. One spouse wonders, why does that account have $5 in it now? It's 18 months after our date of separation. We can do the whole tracing the thing to see where the money went, or we can say, hey, it was $40,000 on the date of separation. We're going to assign $20,000 to each party. I don't care what you did with your $20,000. And so that's a very simple tool that doesn't work in all cases, but surely it can work in many.
Yeah, great.
Yeah. And it's interesting when someone comes into me soon after a date of separation, it's so cost saving because I say to them, look are you still living like a community? You're still living in the same home, paying your bills out of the same account. Do you want to create this date of separation like the drawbridge came down that a judge must do? Or are you agreeing that you're going to establish a budget, guidelines, boundaries around what the spending will be going forward? Or sometimes I had a couple the other day, they had very significant savings and they wanted to do some separate things, but they're still nesting. I said, okay, you take 20,000, like Laurie said, you take 20,000. You go to Las Vegas next weekend to go do what you're doing and you go buy the purse, whatever you want to do. You don't have to, it's your money. It's yours. We've separated it. We've accounted for it. And it's going to cut down on the tracing that when people come into me, I had a couple come, it'd been 4 years. And at the time, husband, when they separated, had a job and then he went on to start a wine brokerage business and it went belly up. And all this money just disappeared because they had
Where'd the wine go? That's what I want. Wine go.
Yeah, I think it got drunk, unfortunately. Yeah, there was another piece to that case. And so I guess a tip we would have for you, if you're in the contemplation stage or if you're in the early stages, the sooner you establish how are we going to manage this sort of mushy period where you've emotionally separated, maybe not physically separated, you might even still be living in the same home, there's still a joint account, but you really potentially in law have a date of separation. Can you explain in California, Section 70 family codes, somewhat nebulous version of what is a date of separation? Because this gets very
Yes.
confusing for people.
It is. So the data separation is very important because that marks the end of the community. So California, we always hear, we're a community property state. So everything's divided 50-50. And that's true. But what that applies to is any asset or debt acquired during the marriage, which is defined as between the date of marriage and then the date of separation. So obviously, date of marriage is pretty easy to figure out typically, but the date of separation can be froggy to deal with because first of all, the legal definition is rather unhelpful. It essentially says it's the point in time where either spouse, through their words or through their action, established that there was a final break in the marriage. So if you listen to that definition, you can tell right away it's extremely subjective. It's really fact specific and can depend on so many different things going on. Sometimes it's easy. Sometimes it's sadly when the spouse found out the other was unfaithful and there's this huge blow up and that's that. Sometimes you can point to when one spouse decided to pick up and leave the house. Sometimes it's really simple because the parties literally had a pointed discussion and literally said, this is it. Our relationship's done. Our marriage is done. But sadly, as we all know, it's usually not that cut and dried. So it really depends on different things. I've literally gone to trial on this one issue and it comes down to literally things like one party saying, the other side came to the barbecue to celebrate our grandchild's baptism, so that means we were still together, and the other side saying, no way. I just did it to show family unity. And then you can imagine it gets really complicated. But the point being is the data separation is key because at that point, the community ends. So the significance is at that point, with the data separation, both parties, either of their earnings now are no longer community property subject to division. Neither asset or debt acquired after that point is community property or debt subject to division. Of course, there's additional complications that come with that, but still, that's a bright line that you really have to figure out, whether by agreement or hopefully not, or the trial, but it has to be established really in order to properly adjudicate your divorce. So it's not something you're going to have to decide if you're contemplating right now at this very moment in time, but you really need to start thinking very seriously about it because that is the point in time, as I said, where the community ends. And it's essentially from that point on, it's going to be figuring out what's community, what's separate as far as assets and debts. So
I have
that's
one tip
definitely
about
something
that.
to figure out.
Yeah, if I may. So we see on our disclosures, the FL 142 schedule of assets and debts. That's why we talked about can the data separation is relevant because often we'll see one or both parties have opened up accounts after the data separation and they're listing those accounts as separate property. Hey, I opened up a Navy Federal Credit Union account and you see the balance is $20,000. But where did that $20,000 come from? Did this guy really earn $20,000 in a month? Or did he perhaps transfer money from a community property account into his now separate property account? This is, again, people aren't doing this maliciously. This is simply people aren't understanding the significance of the data separation. But when we're talking about hidden assets, for us in the room, this isn't really hidden. But for somebody unfamiliar, it may feel like a hidden asset. Where did they get this money?
Great point.
A lot of confusion.
Yeah. I've run into it a lot where people hear because they do the research, be like, data separation, anything acquired after data separation is my separate property. They'll go out and buy a new car, put down a $25,000 down payment, be like, wait, that's my separate property. Nobody, she can't touch that or he can't touch that. It's like, wait, but that $25,000 down payment came from a community account. So just because the timing was after data separation, the source was still community funds. So something so very important as Laurie points out to be aware of.
Okay, so Ken, how are you doing? Do you need to check out to go take care of your fun?
Minute.
Okay, because I thought what I'd do is I'm just going to throw up on the screen, because sometimes this isn't a perfect visual, but it's a starting visual, shall we say, to get an image of what we're talking about, because California is a community property state. And so what we know is the date you got married, guess what? You became a community. I like to tell people you may not have signed a prenup, but you did. It's called family code. If you're divorcing in California, you became a community the day you got married. And the date of separation was the end of the community. But like Ken says, and Laurie will talk about too, what if you received a bonus in March of 2026 for the whole year that you worked during the marriage? Who does that belong to? What if you received grants of stock while you're married and they get paid out after the marriage? Laurie's going to address that too. What if you had an inheritance that you kept out here and never commingled? Or what if you put some of it in here and kept some of it in?
That's when you need the CDFA, when you put some of it in there.
Oh, exactly. And what if you had a home over here and the community moved into the home? So all of these things are why we're looking. They're not so much hidden as understanding what belongs to the community and what belongs outside of the community. Simple things are premarital assets you kept separate and can easily trace. That's where Laurie might come in. Inheritance you kept separate. Gifts that you received, unless it was a fake gift. There's a case where husband gives wife a car for her birthday with a big bow on it. And judge says, I'm sorry, that wasn't your marital standard of living. That's just the family car. We're not calling it your gift. You were not gifted a car. Your husband just didn't give you a birthday gift. What about student loans? You arrive with a student debt and the community paid it off. Should there be a right of reimbursement over here because you leave with your intellectual property and the community paid for that? Yes, there's a right of reimbursement. What if you married somebody that was paying spousal and child support for their last marriage? Do you want some of that money back? Probably want some tracing on that. What if you had a date of separation and you just buried your head in the sand for the next 3 or 4 years? Laurie has to work on those cases. Ken and I had one that actually went to trial, remember, Cal, on date of separation,
Yes.
where they'd been separated for 4 years. And it's binary for a judge. They're
Yeah.
not going to cut in mediation, they could have, but I ended up having to send them off to Ken or send her off to Ken. And
Yeah.
that was another of your success stories.
Yeah.
So you can see the complexity of what we're talking about, but a lot of it is established by law. And so you're not having to make new law. You're not going to go to the Court of Appeal. And sometimes you don't need really almost any of us. You need to know how to read your statements. So Laurie's going to cover a lot of that tonight. Ken, anything you want to top off before you head out to enjoy family?
The last thing I'll leave everyone with is, as a litigator, I get a lot of consults talking to me about, and I also suggest litigation. I also suggest mediation to start with, okay? And a big fear, and you can talk more about this, Laura, but is that if I mediate, I'm not really going to have any recourse to really know what the true financial picture is, because mediators are just going to just take whatever the other side says for granted and just accept it. I always make a point to set up straight, because first of all, the financial disclosure process it's pretty extensive. Number one. Number two is a mediator who knows what they're doing, like Laura, is going to hold people's feet to the fire. They're attorneys. They're bound by the rules of professional responsibility, which means some guy who rolls in the Lamborghini is saying he earns $25,000 a year, and be like, okay, that's cool, let's proceed. He's not going to accept that. Now, my favorite stories is when Laura had a mediation, and there was one of the parties was obviously doing very well financially, and on the disclosures listed nothing as far as retirement accounts, like nothing. But a simple review is W-2, obviously, in the certain blocks where it always lists your 401ks and such. It was obvious the guy had a retirement account contributions going on each year.
So you only saw what he contributed, not what the employer.
Not even
There you go.
Exactly. I point that out because I like to make the point to people that if you mediate, that doesn't mean you're giving anything up as far as giving the full truth of the financial landscape. You're not. Because a good mediator is going to make sure, like Laura, is going to make sure that all of that is on the table and all of that is properly addressed in a divorce. So don't be afraid to mediate, because definitely the way to go. If it doesn't work out, then we'll be going to court together, which there's no shortage of that. So, but the last point I'd like to leave you all with.
Yeah.
And that point is great, Ken, because I've been with Laura in mediations, and she's extremely detail oriented, done hundreds and hundreds of cases.
Yep.
She notices when something looks fishy.
Exactly.
Yeah.
So don't be afraid. She will get to the truth of it.
Thanks, Ken. We really appreciate you making time for all of us this evening. We'll let you go take care of your wonderful family time. And
Sounds
Laurie
great.
and I are going to take it from here. Thank you.
All right. Take
you,
care,
Ken.
everyone.
All right. Bye for now.
Bye.
All right, Laurie, you and me. So it's interesting. Gosh, Laurie, when did I meet you? Maybe 10 years ago? Maybe more?
even I can't
North?
remember now, at least 10.
At least 10. I met Laurie. We were networking, and sometimes you meet people in your life and you see them, you're like, oh, this is a brilliant woman. I said, Laurie, you need to go get your CDFA because we need you in this profession. She came back about 6 months later, goes, I'm a CDFA. And guess what? Since that time, Laurie is educating judges. She's working in litigated environment. She's been in the room with me in mediation. She's worked with my coaching clients. She works as a neutral and mediated. And we have become fast colleagues because we have such a mutual respect. And we just cut through the crap, pardon my French if I'm saying it that way. And we're just practical people. And sometimes we're like, sometimes you need someone to help you strip some of the emotion out of it. And sometimes I say to my clients, two things can be true. Person might have cheated on you as an infidelity. They may not be cheating on you financially. Don't always assume that everything about this person must be bad. And somebody can be a financial infidel, as we've seen, and may not be cheating on you. It might just be
Absolutely.
where they're going. Yeah. What we do in our work together is really one of the things I love about the whole Vesta team is when you're getting a divorce, don't go it alone, build a team. And when you have a team that knows each other, I feel like we have the bat line to each other. We can call each other up. We have full access to each other. Sometimes you don't have the same access because we're all busy. But I can text Laurie a real simple question. Can you just clarify this for me, or Ken, or anybody in our whole real estate team? So one other piece of advice is, like Ken said, don't spend $100 on a $1 problem. So don't overspend on so much data that now it's confounding you, and also build a team. So find out who your people are, build a team. Just so you know, in case you don't, what Vesta does is they go out and build teams, and every hub they have vetted all of us for you. They've done the homework for you and put us together in a team. And we just really enjoy working with each other because we have such mutual respect for one another. So I just wanted to throw that at you. But yeah, Laurie, let's talk about sometimes just some of the basic places, because one of the things that's very common, especially in a long-term marriage, is divide and conquer. Somebody takes out the garbage, somebody made dinner, somebody's investing with their wealth manager, and the other person's working about the kids, getting them ready for college. And they don't necessarily communicate about what's going on. They don't fully know. And sometimes just the lack of information is so scary because you don't even know what to ask. Maybe we start there.
Yeah, let's start there. More women than men come to me saying that they think their spouse is hiding assets. I work with both men and women, so do you. And often it's based on fear, number one, and number two, being illiterate about finances. And I don't mean that in a derogatory sense, as you just talked about, not being familiar with what the marital net worth is, how assets are being used, the cost of living, any type of financial issue you can imagine. And when you don't understand how something works, of course, you're going to have doubts. So what I feel is so important, my number one role as a CDFA is to educate, to inform, to help you understand all the information that is being disclosed by you or your spouse, both of you, the assets, the debts, the income and expenses. And once it's out there, really maybe some of that fear about hidden assets goes away.
Yeah, very much.
And one of the best tools is looking at tax returns. Let me just talk about that very briefly. A tax return will have a section on interest and dividends. And so if you have a bank account, a credit union account, a savings account, or you have a brokerage account that's non-retirement, there's a good chance that you're having interest and dividends paid, and it will tell you on your tax return what financial institution and perhaps more identifying information. And then we can simply go and look at your FL 142. Have all those accounts been listed? Easy peasy, number one. Okay. Number two, if any sales have been made, there's a section on capital gains. There's a section on real estate if you have real estate and you rent it out. And there's a section on business interests, other investments that may not be the normal stocks and bonds. There are things called K1s. And so in literally 30 minutes, unless it's a very long tax return, I can go through a client and say, here are ties to everything you own, or most of everything you own, because yes, there are hidden assets. And once they understand there are ties, then they see what's there. It's educational and enlightening.
And I even add to that, Laurie, the W-2, because a lot of people produce their tax returns, not their W-2. In the case Ken spoke about, husband worked for a very large corporation here. So I had every reason if it swims like a fish, smells like a fish, it's probably a fish. I'm like, you don't have a 401k? No, I don't have one of those. I said, let's put your W-2 up on the screen. I'm like, look at box 12. Let's look at that. And at the bottom of the W-2, you want the whole form. It tells you, it's a legend. Here's what every box means. And learning that Box 5 are your wages you want to talk about. And if there's a difference in the two, that means there's also retirement savings. And so learning how to decipher something that's sitting in front of you demystifies and takes a lot of the fear out. You're like, oh, because how many people read their W-2? Really?
Yeah, only we do, but I'm
Okay, weird.
and it's interesting. And then for support purposes, the W-2 is interesting because it'll show a box for Medicare wages and then might see a smaller amount in another box because there might be tax deductible things like a 401k contribution. You may also, in some cases, not every company, but some companies will actually break out what was equity compensation as a box so that you can understand then the base salary and bonus must be X because equity comp is Y and we see total comp is Z. So yeah, the W-2, that's 5 minutes and it has a legend, as Laurie talks about, that says every letter 1C, do whatever is 12B, blah, blah, blah.
It's so informative and it's sitting right there. You don't have to hire anybody to read it. You
No.
just have to be willing to look at the box and read the legend. And if you can get the end of year pay stub combined with the W-2, now you know how much of the income was bonus, meaning it was a one-time, whether some of it's stock, whether there's an employee stock purchase plan. I have a client right now, and she's talking spousal support, and she signed up for an employee stock purchase plan, and $2,000 a month of her pay is being diverted into it. And she's, how am I going to afford to pay
He's
spousal
maxing out
support?
on that. That's about the max.
Well, good for you. You're going to have all this stock, but it doesn't mean you don't pay support, right?
So that's a voluntary purchase,
She
not
has
like
all the-
compared to a mandatory pension contribution. If you're a teacher, for instance, you have to give a large percentage of your paycheck. So
no
Laura,
choice.
I think you really just covered number one, and that is, again, an educated mediator like you, some family law attorneys that are educated about the finances can help you with this. Or frankly, you just take a W-2 and you can Google what's each box mean.
Absolutely. Yeah. So this is the beginning of financial literacy. Don't be afraid of something you've never looked at. I just had a client on the weekend and I've been asking him to provide me with a 401k statement for the last 7 months. And he literally said to me, he gave me a screenshot, which I won't accept. Snapshot. It's not a statement. He goes, I don't know what a statement is. I was like, okay, then we're just going to work with this. I had him log into my computer incognito, had him log into his account, and I said, see this right here? It says statements. He's, oh. So we downloaded all the statements. When I'm mediating with couples, I create a shared Google Drive, so everything's confidential and everything's in one place. You're all looking at the same thing. It is one of the ways of avoiding all these crazy subpoenas because everything's sitting there transparent. So sometimes, in his defense, he's from a different country. It's not something he's ever paid attention to. He works in the arts. To him, it's like, I have a 401 whatever. I didn't even know I had one of those things. And he actually didn't. He didn't even know. And he was surprised and impressed that he had money sitting there that he didn't even know anything about. He's, wow, I didn't know I had that money there.
Divide in half, but he didn't think he had anything. So half of something's better than nothing of nothing.
Yeah. And he honestly thought, I don't have that. And I said to him, I'm looking at your stuff and I know you have.
Yeah.
I know you have a 401k and now you need to go find.
Let's talk about the 401k as a big segue because everyone always comes to me about hidden assets. What about hidden debts?
Yes.
The community property state, hello. Yeah, you're going to divide assets, but you also divide community debts. So let's talk about that 401k. If you don't have an entire statement, you may not know or see that there was a loan taken out against the 401k, which reduces when you're using a quadro to divide that 401k. It's very important if the loan's included or excluded. Another example that I see more often than I'd like to see is people on their disclosures will list a brokerage account, but not list that there's a margin loan on it. So the brokerage account may look like it's $800,000, but the real value may be $600,000. And by the way, we, the community, is paying an exorbitant interest rate to borrow that money, and why are they borrowing that money? So that leads to another conversation. So I think, again, going through this sort of financial analysis gives you kernels to discuss major issues that will need to be addressed in the divorce settlement.
And I think one of the important things about the 401k loan is if you're going to take out a loan in your marriage other than a 401k, it's going to be visible. Going to be a withdrawal from a bank account. This is coming off the paycheck. So back to seeing the pay stub, and most people don't see their partner's pay stub anymore. It's all digital. And you're like, you don't have to sign on to or approve your spouse taking a 401k loan. So they can borrow against a community asset and never discuss it with you. And you will not even know unless you have their pay stub that $400 or $500 a month is paying that loan with post-tax dollars, Laurie.
Correct, which is bringing in less money into the household. The other thing that I find interesting is that I've had clients talk to me about wanting to keep the house and do a buyout. And yet I always ask, is there just a mortgage? Do you might have a solar loan? Do you might have a HELOC or a second mortgage? What? That's so the value of your home may not be as much as you think the value of the home is if there's these encumbrances on that. And it's shocking to me how many times people don't even know what's been borrowed against the home in which they live.
Yeah. And so if you're all new to this game, go ahead and look at FL 142. It's foundational because if you look at it and think, oh, real estate, like people like, I just had a client the other day goes, yeah, we do have a timeshare, but I stopped paying on it last year and it's hurting my credit rating. Guess what? It's not hurting my credit rating. It's hurting his and his spouse's credit rating because they're married. And so I'm like, huh. So did you discuss with your spouse that you decided it wasn't worth paying? He goes, no, I didn't want to pay that anymore. So he's created a community debt, potentially a dent in their credit score, which if somebody wants to be buying a home out and needs to apply for a loan, one of the most important things they're going to need to do is protect their credit score and find out what's going on there. Laurie, what advice do you have for people when they're just thinking that half the time they haven't even looked at their credit score? And I'm like, it's so easy to find your credit score these days. Every banking
On
institution
everything
wants
now.
you to
I
look at
can't
it.
even log into my mortgage statement, my Chase bank account. They're begging you to look at your credit score.
Yeah.
And you're entitled to get a credit report free once a year. You want to make sure you're in a legitimate, government sanctioned site because there's a lot of scams, obviously. But yeah. And also if you're working with a mortgage broker, they're going to be all over you on that credit score and giving you advice on how you may want to raise that credit score. So those are some interesting things. I'd like to talk a little bit about underreporting of income.
Yes, important.
That's not really a hidden asset, but it's hidden. It's a hidden something.
Yeah.
So we see this a lot for self-employed people, either a Schedule C business, is if you're a sole proprietor and you simply report your business income and your business expenses on your Schedule C, as well as an S Corp, very common around Southern California, a lot of S Corps. And so one of the jobs that I'm asked to do is to go through and give my opinion on what expenses that are being deducted are necessary for the operation of the business, because expenses that are not necessary to maintain this business usually get added back when we are trying to calculate what's the real income on which we should base child and spousal support. So things like I may see somebody taking 100% deduction for their car when we know they barely use it for business and they use it probably almost always for personal or travel. And it's a lot easier, I think, even with CPAs, to say, yeah, you can take that as a business expense. Yeah, those video games that you watch because you're a video game developer and you need research, even though you're doing it for your own entertainment, yeah, that's probably a legitimate business expense. Or one of my clients who was a yoga instructor, she owned a yoga studio. She kept writing off her yoga clothes. And I said, you could go down to the Flower Child and get a quinoa bowl in your yoga clothes. So that's really important. I can understand. So if you're in a divorce where one or both of you are self-employed, it's very important to get an analysis done of what business expenses are legit for reducing your taxable income, but need to be added back because, especially with child support, spousal support less, but child support, we have a public policy in the state of California, and that the definition of income is very broad when you are supporting children.
Yeah, income available for support, we call it. So even if you have stock, but you choose not to cash it in, income available for support. And one of the things we do with S corps, like Laurie is saying, I say, look, imagine you work for an employer and you have perks. They give you a car, they give you a cell phone, you have an entertainment budget. They don't really question it because you're apparently entertaining clients. That would be treated, if you'd be W-2, but it'd still be treated as untaxed income if the employer didn't tax you. They're perks. So if you're an S corp and you perk yourself, that's okay. I'm not reporting to the IRS, not my job, but we're going to add it all up. That gym membership, your dry cleaning bill, maybe not, maybe your gym membership, but maybe your personal trainer. So we're going to look at, does it, like Laurie said, does it belong as an aspect of your employment or even just part of it? All your kids on the cell phone plan that you're paying for through your business is probably not entirely a business expense. And the golf lessons that you're putting there for your son or something like that, no. Sometimes I see my own mediation bills in the corporate. Yeah.
Oh, yeah, they're paying legal expenses for sure. Yeah, so you're
Yeah.
not supposed to do that. So, yeah, we're not going to turn you into the IRS.
No. No.
We, so I guess what I'm thinking about is if you're
Yeah.
in mediation, yeah, nobody's going to be happy because you're going to argue 80% and the other side's going to say, oh, it's 50% fine and dandy, whatever. But in mediation, maybe you can say, look, I think there's a range of $50,000 that are questionable. Maybe we just say 25,000, call it a day. Whereas when I'm on a litigated case, and I'm working for one client, I can't just pick up the phone and call the other party and say, hey, did you just go to Italy and you write this all in the, okay, no, we've got to go through, too bad Ken's not here right now because he about in litigation, how that whole chain of events would transpire to get
Right.
information.
Yeah. And also when people are self-employed, it's often highly variable income. And even when people have employment and there's bonus income. So we want to know all the income. We want to know if it's steady or variable because there are different ways that support is calculated, both child and spousal. We have, here's your guaranteed range of income. And then if and when received, like, oh, you can't put that down because it's a bonus. Now, guess what? You all get bonused. If one person receives a bonus and you've historically received a bonus, you may not get it next year. But when and if you do, the calculator captures that as well. And so often I have clients say, why am I paying for a bonus? Isn't that mine? Because we're divorced, we're separating. So there's a date of separation. So the marital standard of living and the income that's established for purposes of support was established during the marriage. And if you earn more after you separate, the child support will move with you if you come back for review, but not the spouse. So the spouse will get capped out at the marital standard of living. But Laurie and I have a lot of cases where maybe they work at Amazon or Microsoft. They're working for these big corporations where a significant chunk of income is stock with a stock price that's all over the place. So once a year, some people have to come back to reassess what's a true up, meaning what do I owe to true up for last year's support I didn't pay yet on the additional income I earned, and what should we set the bar at for next year? So ideally, there's not a massive true up. And some of these cases, and some of them I have both people.
And
Figure-
equity compensation or variable compensation commissions. And
Yeah.
absolutely. Laura, I know we have a lot of questions
Yeah.
in the chat box, but let me just cover maybe two more issues.
And
I
then
wanna
we'll jump to
cover. So
questions.
I want to talk about actually three more issues.
Yep.
Hidden assets outside the United States, post-separation accounting, which we talked about a little bit, and crypto. So I'm just going to say a little bit about hidden assets outside the United States. Yeah, that's difficult. That's going to be difficult, but I will say this. Oftentimes, some of those accounts or properties may be that spouse's separate property sometimes. And so they are supposed to disclose that information on their financial disclosures. Sometimes they do not. Sometimes there's a mom's name on it, whatever. But I will say that if there are assets outside of the country, sometimes we can see If they're being funded with community funds, we should be able to figure that out because we can look at US-based accounts. Maybe some of the wages are going into US-based accounts, and then once every now and then it's being transferred overseas. So we may not be able to get the overseas account, but we can see that money is flowing.
Yeah,
Any
we can see a
comments
wire
on
transfer
that?
on a
Yeah.
statement or
And we're not going to solve the entire problem here, but we will have some clues.
for sure.
Then let's just briefly, actually, let's talk about crypto assets briefly and then post-separation accounting. Okay. I tell you, a year and a half ago, as a neutral, when I was meeting with all these clients as a neutral, I can't tell you how many gentlemen told me how brilliant they are because they have all their wealth in crypto and their wives are like, yeah, and they made a lot of money because I don't know what they started with. So, in fairness to them, they might have started with a very modest amount. It's now tripled. Okay. One gentleman actually was able in the 401k, which is retirement assets, he was able to use the self-directed trading mechanism and buy Bitcoin ETFs. Okay. So a year and a half later, I haven't heard from anybody, but I suspect the balances are much lower. Okay. So the volatility in crypto is very difficult, especially if you've been living a lifestyle off of this volatile asset. And now things have plopped down. And so that's a big issue. But the second issue is that there are some platforms like Coinbase, for instance, or Robinhood, where you can easily see this. It's almost like a regular standard Schwab brokerage account. However, a lot of people have crypto stored outside. You've heard of wallets. And I've actually been debating getting a certification in crypto because there are forensic accountants and CDFAs that are now becoming experts on that issue. So stay tuned. This is ever evolving. Laura, I'm sure you've seen it in your cases.
Lots of it. Yeah.
Lots
And
to
it's,
hear your comments on how that's addressed.
and even people are using it to gamble because the crypto goes offshore and you're not supposed to gamble online here in California, supposedly. And so I've had people, that's where their crypto is being churned. And like you say, like the value of an asset is closest to a date of separation. So imagine if you had, and I did have clients, husband had significant crypto, wife wanted the house, husband totally wanted the crypto. The deal was he's keeping the crypto, she's keeping the home. They came in to sign. It was about another 3 or 4 weeks after everything. They'd done their attorney review. Crypto had done one of these. And he's
Buyer's
report. Yeah. And wife, you know what? We negotiated this whole deal and it was fine for you at the time. And it was, we valued them both at the same time. You chose a risky asset, you're signing. And he signed. And so if you're going to choose a risky, if you had $100,000 date of separation and today it's worth 30,000 and the value is date of separation.
Unless it's a
Not
house,
if
then
you're-
it might be the date of trial. So
Right.
that's the thing. If it's a community asset and
Yeah,
there's
then it's-
volatility, the point you're making is they decided on a date of
Yeah.
due. Whether it's
Yes.
a date of separation or 6 months later, they agreed we're going to value the house today, we're going to value it today. Then you can't be changing. You can't,
Right.
because I'm sure, yeah. So
The housing market news too. But you're right,
It is,
Laurie, if
but-
you haven't put a pin in it and it's
Pin.
in the market, in fact, anything in the market, clients, I just have a couple right now, they've been separated for 2.5 years. And they're like, what date should we use for all of these retirement? They have several, never blended their retirement accounts into one account. And they have about 7 retirement assets, old 401ks, only one's contributory. So I'm like, all of these are in the market.
all of them are old, the other
Yeah.
ones.
So they're just staying with the market and they pulled up date of separation statements. And it was when the market was quite depressed. I said, I'm going to tell you right now, you probably got about 25% more sitting in there without even seeing your statements. And they're like, oh, because if it's in the market, just remember when housing was going like this during COVID, I'd have couples come in negotiating, I'm buying you out, I'm buying you out. And all of a sudden, nobody could buy anybody out because they're not so much.
Base interest rates were low, though. That was
Yeah.
the
Yeah.
help.
But now, so it's also knowing that the longer you take to put a pin in something, it can really impact if you have highly volatile assets. And if you, especially if you know your spouse is invested in crypto and that's not what you wanted to be invested in, you could have a very early discussion. Look at, this is too risky, not what I agree. I either want you to take it at this point in time or I want you to cash it in. So we have a cash value that we're going to be talking about. because we have automatic restraining orders. You're not supposed to be playing with this asset. And most of these people are still trying to buy to catch up to their losses.
And are they buying with post-separation money, or are they just using community funds through something else and transferring?
Precisely.
Anyway,
Precisely.
crypto is gonna be a challenge because we don't know if people are hiding it. So it is a challenge. I will admit that. And then I think we talked a little bit at the beginning about post-separation accounting. Is there anything else we need to talk
And
about?
I think just the only other assets you want to look for is some people have invested in gold coins, gold bars, silver. All this stuff has gone up a lot. It's settled down a bit. But what was sitting in a drawer or the back of the safe, was it inherited? Was it a gift? Because if it was inherited, grandpa left me these gold coins. They're still your inherited gold coins. They don't belong to the community.
And you get the increase in value on those because those are your separate property.
Exactly. So it's complicated. Absolutely build a team. We're going to tackle some of your questions and see what we can do to answer them. I'll look at our Q&A here.
Okay.
Somebody is questioning, is there a penalty if a person discloses incorrect info in financial disclosure document during mediation? No, there's no penalty in mediation. And oftentimes there isn't in court. If you demonstrate to a judge that this person purposely misled the court and the other person, there could be sanctions, but it's expensive to even get sanctions. So they first of all start with the assumption that you probably didn't know what you're doing. So where it comes up, like, it's interesting. Ken and I had a case together. He was consulting attorney and wife had consulting attorney, and they came in. And one of the reasons sometimes people choose mediation is it's very sensitive. Husband had been involved in extramarital affairs with people outside of his gender, and he was a fireman and didn't want this to become public knowledge. And wife goes, you need to repay me for all of this philandering, his hotel rooms, everything. And so there was tracing. And wife was restored. Now, wife's version was, you spent 30,000, so I get 30. But the math is, you spent 30 and half of that was my money, so I get 15.
Yeah, let me repeat this for people.
Yeah.
For like, it's really
Yeah.
important. So if I have an affair and I spend 30,000, and that could be me and the partner in a hotel, us both eating dinner. It could be me buying gifts at Tiffany for this person. But half of that 30,000 is my money anyway. So when we talk about the terminology we use is a reimbursement to the community. Yes, he would reimburse, or I would. Am I the one? I'm the one with the affair. Okay, then I'm reimbursing I forgot where I was. I'm reimbursing the community 30,000, but that means my spouse gets half of the 30,000. But we would see in the marital balance sheet and credits and reimbursements, we may see that larger number. Okay.
Exactly. Yeah, it's important because it was kind of, a lot of people feel emotionally sorry about that. How come he got 30? Why don't I get 30?
And then the second issue is that we don't see it all the time, but you can actually file final declarations of disclosure. Often they're waived. I'm working on a case right now where it's going to trial, and we have just gotten final declarations of disclosure. And so if you see any errors on the preliminary, you are free to update those.
And you have a continuing obligation to update.
Yeah.
I was mediating a case that turned into litigation for good reason. Husband was very high executive at a company that was taken over. And all of a sudden, about a week after he did his disclosures, there was a multi-million-dollar payout to him that he didn't put on his disclosures. Clearly, he knew it was coming because he was an insider. Wife saw the public announcement, and you're not getting any of that. It went to court. It went differently, shall I say that? Could have been solved in mediation much less expensively. Yeah. Question here: have you seen a spouse intent on court change their minds to mediate? I've not only seen them, I've mediated them, because at some point a lot of people realize this was crazy and they come to mediation. I will tell you the tougher part is mediating over who pays what legal fees. It's the toughest part of that mediation. I wouldn't have spent this if you hadn't have done that. However, I had a couple that came down from Los Angeles not that long ago. He was a retired doctor. She was like 20 years younger than him. It was a complicated litigation because a lot of his assets were technically separate property acquired before they married. And he'd been living off significant. And you know what? They came to mediation. We solved it. We did 4 hours and 4 hours, 2 long mediations. We solved it in 8 hours. And they've been in
Fabulous.
court for 2 years. And they were both
Wow.
content. And it wasn't what a judge would do. He made sure she had a home. And she's, I need spousal support. I'm like, he's 78 and you're 52.
He
So
was still working at
Mhm.
78?
he was mostly like some guest lecturing and things. It was
Mhm.
mostly living off his his assets. And I said, I don't think you want spousal support because he's going to probably die before you. So why don't we get you a fund instead that bleeds off and pays you? And what we structured is that in the event she died before him, the money went back to his estate. Then he was open to that. He's sure, I'll do that. And that way she was taken care of. So in mediation, we have so many creative options. You need a creative mediator, but we have, and a CDFA who can help you think through this too, because judges have a hammer and a saw and a
Not much
50-50.
time. Not much time. And
Yeah.
then there might be a 3-hour mandatory settlement conference before that, before it gets to the judge with a volunteer attorney around town. And yeah, so they have
Mm.
limited tools, as you said.
Okay, we got a tough one here. There's a child from an affair partner. He's paid zero
Oh, wait,
child
back up.
support
Child, I couldn't hear. Child from what?
from an affair partner.
Was that
Somebody had a child out of
there was a
wedlock.
child out
something.
of wedlock,
Out
yes.
of wedlock. He's
Yes.
paid zero support 2.5 years, provided zero disclosures, despite having a master's degree. I don't know if master's degree makes you more likely to do disclosure. Anyway,
Maybe it
person,
gives me more income. Okay.
yeah, person filing for divorce and limited income, but I'm not sure I understand the question because I'm trying to understand because if you had a child and the other person wasn't married to you, it was an affair, there would be child support. There's what's called a paternity suit.
Paternity, and then
Yeah.
paternity
And then-
termination, and then
Yeah. And then the person that was married to him might have a right of reimbursement if they divorced him because they paid child support for a non-community purpose. So I don't know if I'd captured that. Yeah.
if the father did not have separate property to pay support, then the community can pay the support. There's no reimbursement if there was no separate property available.
But if you're married and you pay for a previous child or spouse or somebody out of wedlock, and technically the community's paying it,
Yes.
not just the husband, then wife would have a right of reimbursement.
And there are usually, but he or she, whatever, is supposed to use their separate property
If
first.
they have any.
Or
If they have
if
any.
they
Yeah,
have any.
if they have any.
Or
Yeah.
raiding
Yeah.
the community to do
Yeah.
it.
Yeah. Okay. Complicated. So 403B, 15 years, not married, 4 years while married, contributions 50-50. Are they still 50-50? So Laurie can answer that. There's the premarital portion and marital portion.
Okay, so I want to use this opportunity to describe how our methodology differs when we're talking about a pension or a defined benefit plan versus a 401k, 403b, 457, which is a defined contribution plan. So they mentioned this was a 401k.
Yeah.
Okay.
403B,
Well-
so similar.
Oh, 403b.
Yeah.
So what we do, if the records are available, and I will say, if they are not available online because they don't go far that back, often the financial institution will have records often, and they can mail them to you and you can scan them for me because I don't want hard copies. I work electronically. But what we do in that situation is we need a date of marriage statement. So we can see what the balance in the account was at the date of marriage. And then to do a proper tracing, I would take every monthly or quarterly statement from the date of marriage to the date of separation, and I would make my little spreadsheet, which can be a rather long spreadsheet, how many years you've been married. And every time there was a gain or loss in the account, I apportion it to the separate property or the community, and contributions that are made during the marriage are apportioned to the community plus the growth on those. So then we get a nice little spreadsheet that shows you on the date of separation what percentage was community, what percentage was separate. And then if there are post date of separation contributions, sometimes the financial institution with a qualified domestic relations order will figure that out for you. Sometimes not. If it's DIA CREF, we have to do it manually. That is versus a pension where we would do and actually do a ratio. If the person had worked there for 15 years and they were married for 5 of the 15 years, then 1/3 is community property. You are entitled to half that. And then we've got to figure out what is the value of the pension, or are we going to do another domestic relations order or qualified domestic relations order so that when monthly payments are made after retirement, you get your half of the community property.
Exactly.
So
And so they're not treated the same way. It's not a straight ratio when it's a 401k or 403. However, I have had situations in mediation. They're so little of the premarital portion is 18 years, the marital portion is 3. They're like, we're not going to pay for tracing. They've created their own ratio by agreement. In mediation, you can agree to not use the systems that Laurie's talking about if you both agree. You can't force another person to use a system that's not the system the court would use. I always tell my clients in negotiation, we say, what's your BATNA? What's your best alternative to a negotiated agreement? And what's your WATNA, your worst alternative to a negotiated agreement? Usually your worst alternative is using the full thrust of the court. Subpoenas, disclosures,
sometimes that's your best, though.
because you'll find it. You'll find the plum that you were looking for. But it requires discretion. It requires discretion. And also, I consider how much time are you willing to give to your divorce? Because a high conflict litigated divorce is 3 to 4 years, Laurie. It's not usually going to get
People
done
have
before.
been separated 6 years. I won't
Yeah.
even take those
Yeah.
cases for too
No.
long.
And been through several attorneys sometimes. So what is the price of peace? Ask
Right.
yourself that. There's a price to peace. Sometimes you can't walk away with everything, but you can walk away with your state of mind and the capacity to move on, because you could have been working those years and moving forward. You could have had the money in your pocket and been investing it instead of watching the market, like the crypto market, do what it's done to it. So
And it's appropriate mediation. I have a case right now where this one neutral has to trace separate property in every single account. Whereas if they were in mediation, maybe they'd say, let's just trace 2 accounts because we're going to compromise on these other accounts. That's another way where you can get a partial, full accurate assessment and a partial compromise assessment.
exactly. Thanks, Laurie. So if someone wants to know what can be done if new information is found out after divorce, so I guess I would say it depends on the information. I actually just had a mediation client from 2017 email me just yesterday saying, I just discovered a retirement asset that was not in our divorce. So the law says there's no statute of limitations. It can still be divided, and it could even be divided with sanctions. The most famous case is the Rossi case, ROSSI. Woman wins the lottery and I want a divorce. She doesn't mention she won $1.3 million. Husband is alerted to this about 3 years later. He goes back to court, basically an undisclosed asset. And what was the award? Not only did he get his half, he got her half as sanctions. Yeah. So if you knowingly withheld, if you committed fraud to try to steal from your pillow mate, from your highest fiduciary person in the land, your spouse, the court still followed that practice of basically loading up with sanctions. If it was totally a missed asset, I had another client probably about 6 or 8 months ago. Oh my God, I just found out I have this pension from IBM that's $400 a month that I totally forgot about. Can we split it? And I'm like, yeah, like we can do that. We can do that. We can add it to the list. So it's one of those it depends answers. If you just found out that it was to do with the math of spousal support, you're probably not going to get that. It has to be an asset or a debt. Probably an asset, really, that you didn't know about. How can you use date of separation to your advantage? That's interesting.
I want to hit this one because you're a neutral mediator. So
You go for it.
I'm going to be quite honest here. Okay. Look, if you are the primary earner, you probably want the date of separation as far along back ago as possible. And if you are dependent on your spouse's income and assets, you want a recent date. Okay. Yeah. And yes, it's a zero-sum game. I'll give you an example with equity compensation. If you receive restricted stock units, this date of separation matters. Retirement accounts, the date of separation matters. Now, Laura, you have to be a neutral when this issue comes up. I'd love to hear your perspective on this.
Okay. I'll give you 2 perspectives because I also work as a divorce coach. When clients come into me coaching, trying to plan their strategy to exit, I say to avoid any argument, half day of court trial. Sound a little cold. Email your spouse, say, I know we've been talking about this for a while. It's finally over for me. We're going to have things to discuss. A simple email saying that I'm ready to begin our exit strategy. My goal would be we mediate. Can we talk about it? So now we have this line in the sand, but they have to be ready, like you said. Depends on which side of your fence you're on. But at least now we've got something because the court bases this as a fact-finding measure. What did you do after that? Did you go to couples therapy? Did you try again? Did you go take your wedding ring off and tell everybody, including your kids? So it's going to be fact-finding. As a
Yeah.
mediator, we often cut the difference. I have a case right now that's about to resolve. Husband was poached to NVIDIA, received very significant stock, and he shows up because he's an engineer with a spreadsheet saying, here was her date of separation 2 years ago. She went to Europe and she bumped into an old boyfriend. And she's, no, I was visiting my mom who was dying. Of course I bumped into old friends. It was where I used to live. I didn't leave the marriage. So they had a very emotional argument. They each brought attorneys in because that was one of the toughest part of the case. And they actually agreed on a date of separation that was neither here nor there. It was in the middle. So,
And that's an important point, that you can actually, particularly in mediation, set a date that may not have anything to do with either date, just as a compromise, because you are using that date as your financial division. When Ken earlier in this webinar talked about the marital community stops accruing on that date.
yeah. And I've also done this with clients. I said, okay, here's another option because I'm only here to present options. What if you said date of separation for the 401k was X, but all the bank accounts is Y, because you were still living in your bank accounts, sending your kids to college, buying groceries, living together. But clearly you had an emotional, you both actually agree that 2 years ago, the only reason you stayed together was you're waiting for somebody to graduate. And now you're coming to see me. And it's a way of saying, okay, we actually agree we had a date of separation, but trying to untangle what we spent and who went on a trip and who bought the purse or whatever, we don't want to do that. So I'm okay with saying your retirement after this date was your separate and my retirement after this date was my separate, and here's the community bundle. So we can even do a hybrid.
That's great, because in my litigated cases where I have to prepare a marital balance sheet, I have spouse one side here, spouse two sides here, and I can't, we're using one date of separation because we're trying to calculate an equalization payment. So another great benefit of mediation.
Yeah. Okay. So a few more questions. We're trying to get to all of them. And first of all, I just want to say, I'm sorry if we can't get to all of them. All of us are available for separate consultations. We're not here to give specific advice tonight anyway. Educate, inform, connect. I think we can hit a few more here before we're done.
A lot of questions.
There's a lot. Let's see here. And some of them are like reading a book, so I'll go with the easy ones. My spouse claims 400,000 plus in inheritance. However, I have bank records showing that a similar amount existed in an account in his sole name before our separation, before his mother passed away. Previously informed by my lawyer that he does not have documentation to support the inheritance claim because it was too long ago. No, this is where mediation and litigation varies too. If you're claiming it's your separate property, you inherited it, you didn't commingle it, it's separate, it's always been separate, you have to prove it. You have the burden. In mediation, I've had clients say, yeah, I just had one the other day where husband says, I got 132,000. They agree that some of it was spent on the house. And so wife's willing to accept that he's going to get a $65,000 reimbursement without tracing. A compromise. Skip the tracing. I can live with that, is what they're agreeing to. Laurie, you have to do these kinds of tracings.
And here's a nuance that people don't know about, is that this happens. Wife gets an inheritance, $100,000. Okay. It's clear. She deposits it in the couple's joint bank account. We still know the bank account's $100,000 higher than it was, and so forth. A year later, upgrades to the home. She may think, because of the separate property reimbursements, that she's going to get her whole inheritance back. However, her inheritance had been deposited in an account, and now, because it sat there and didn't directly go to pay the construction or the materials, we now, if I'm going to be asked to trace this, I have to look and say, darn it, they bought $200 worth of the groceries after 3 months later, they went to Costco. Oh, there's the tuition. Oh, there's this SAT prep. And I have to show, not every statement, every single transaction to see what was decremented from that separate property. That's called, it's commingled. It is a community exhaustion method. And
Yeah.
then that's why maybe we end up though at that 65,000 that
Exactly.
cost.
Yeah. And for a lot less time and probably less money. So you have to ask yourself, like Ken said at the beginning, don't spend $10 on a dollar problem. If you're not gonna, is the juice worth the squeeze? All those things we're saying are real. And the problem is you don't know necessarily in advance. So Laurie,
What do you mean by that? You don't know
meaning,
that.
meaning you know that you're you've never been divorced and you're like, oh, my spouse is claiming an inheritance and should I trace it? If they came to you and asked that simple question, should I trace it? Is this going to be a cost benefit? How can you give them an oversight analysis about here's what it would cost? And if you're saying you're going to be missing $200,000 if it's truly inherited, because half of it's not yours anymore, and I could spend 25,000, the juice is worth the squeeze. But if guess what, you were going to get 25,000, it's going to cost me 25,000. And I may not get it. And I may not get it. May not happen.
Exactly. We
Yeah.
have to see, is the investment worth it? Okay. And right now I'm working on a case where I don't think the investment is worth it, but the client wants to do it.
Yeah. I like people, I'm practical. So when I'm in mediation, I say, look, here's your option. Laurie's like, right here. I'm happy to send you over. And I like to send a mediation to Laurie as a neutral so she can collect the data from both of you and get your arguments. And she can help you say, look, guys, I'm working on this and you might just want to go back and mediate this. Maybe this is not going to be worth your while. So it's nice sometimes also in a mediated environment, you can use an expert as a neutral. And when they're brought in as a neutral, they're now thinking about you as a couple. Are you just hiring me? Because I'll do this work if you hire me, Laurie. You're going to do it because that's your job. But you're not going to necessarily say, look, at low odds, you really going to get this back. You maybe want to not bother, go back and negotiate when there's two lawyers because they're just not having a conversation typically.
Particularly with the more Marsden case where somebody's bought the home before marriage. And when I figure out that the community interest is so tiny, it's very disappointing for the one spouse who just assumed we've lived in this house for 20 years. I had a case last year on this and so that's where then I need to pull in the mediator back and say, hey, the numbers are showing this result, but the two of you may not feel that's an equitable result based on how your family has operated, and go talk to Laura.
Yeah. And I like to use that word equitable because people often say it's not fair. And unfortunately, divorce rarely feels fair. But equitable is a concept from old English law where the standard law just didn't quite work. It didn't seem quite right. And so the equitable law says, let me just make this a little more fair, for lack of a better word. So I just find when we think about, is this equitable? We start to think more about, did I get everything or did I get enough? And can I move forward with this? Will I be able to sit with this and go, at least this is over. I can move on, move forward. Because the bitterness of divorces that end up in high conflict litigation, it just doesn't go away. And you really only get one chance to parent. And I don't care if your kids are 5 or 25, they are products of your divorce and you're potentially creating a life trauma for them. And I always say, like, when you enter divorce, no matter, most people have children, even if it's a stepchild or they're at the grandchild level and they can't babysit anymore. I actually ask them to go away and write the story they hope their children will one day tell about their divorce. And that should be their North Star, because can you make your children proud? And when you're showing up at their wedding or at somebody's 80th birthday, are your children watching you to see how you're behaving, or are you watching them because you're celebrating? If you've reversed that, harm will never, you can't recover. I call it the butterfly that keeps biting. The butterfly effect is supposed to be a beautiful effect. when you turn it into a butterfly that bites, it's multi-generational trauma that you're now investing in, unfortunately. And no matter how much therapy you offer your children, they won't recover from this lightly. They really won't. So I think we have to zoom out and think, okay, we can do all this math, and part of this BATNA, is this the best alternative? Is this really the best path to go? Or is it better that I find a way to move on, reestablish my life, find something I can live with that's equitable, and rebuild? It's very hard to rebuild when you're emotionally and financially just devastated. So I think I would throw that in as my closing remarks. Anything you want to add, Laurie?
I will just share an anecdote that when I got married for the first time at age 39, I required my mother to sit with her 2 ex-husbands and their significant others, and they sat with my husband's parents who had been happily married all these years. So we had all these couples at the table. I heard laughing coming from the table. Everyone had a great time, and that was closure for me, being a child of multiple divorces. So thank you for your words of wrapping this up, because that made me remember that memory at my wedding.
Well, that's beautiful. I'm glad that's big closure. Congratulations to you. Yeah, I hadn't heard that story before. So thanks for all of you for being here. It's really our pleasure to serve. This is a recorded event this evening. You can always reach out to Vesta if you'd like to watch again, or maybe you had to step off early and take care of your own children, like Ken had to tonight. We're here every month. Next month, we're talking about custodial arrangements, but we're also going to include the pets because they get involved too. And there's a whole library over at Vesta. So you have been with the Carlsbad Hub of Vesta Divorce. Our pleasure to have you here. Please have a wonderful rest of your day or evening, whatever part of it we've captured. Bye for now.